everybody, this is Jeff Gibby. I want to show you around the new add-on Chuck Hughes, Prime Trade Select for MetaStock. Chuck's a good friend of mine. He lives actually down in Monterey, California, and he's been trading for a number of years. He does a lot of trading seminars. He's a very influential figure in showing people how to trade and how to trade successfully. And actually, one of the things that I like about Chuck is he's actually won quite a few trading competitions, more than anybody else in the competition. So what I want to do is I want to talk a little bit about how this methodology actually works and how it selects stocks. And we've done a really good job of tying what he's doing into the MetaStock software programming and making it available for you. The Prime Trade Select method is actually a fairly straightforward methodology. Simply put, there's 3 steps to it. We're going to determine the price trend. We're going to confirm what that price trend is, and then we're going to decide, based on whether it meets step 1 and 2, we're going to determine a low-risk entry point. And that's pretty much what we do with Chuck Hughes' methodology. So, of course, when we're in the goal of trading with the trend and trying to figure out what the trend is, the goal is to find the stocks that are going to work well for that particular trend. And the specific methodologies that Chuck uses is he looks specifically to buy stocks that have their 50-day exponential moving average above the 100-day exponential moving average, and that would be a bullish criteria for an entry. If the 50 is below its 100, then we'd consider it a bearish trade or a bearish opportunity. Okay. Primarily, here's what it looks like on the chart. You'll notice the 50-day exponential moving average is in blue. The 100-day exponential moving average is red. And primarily, this stock has been in a bullish zone for quite some time. So that's how we determine the price trend. So now we're going to move on to step number 2, which is to confirm the price trend. And that's equally simple. Basically, when Chuck is looking for methods or looking for stocks to trade, he likes to trade stocks that have traded at a 52-week high in the last 6 months. And he also wants to see on-balance volume higher than it was 6 months ago. Looking at the same chart, basically in this particular example, the on-balance volume, I've added it to the chart, is sloping up. And we can look at any spot on this particular chart, but it's going to be higher than it was 6 months ago. Now we want to determine a low-risk entry point. And the way that he does that is he uses Keltner channels to determine when a good entry point is. If you're not familiar with Keltner channels, basically they were originally developed by Linda Radke in the 80s. And he likes to use them to help time trade entries and exits. He uses them as high probability buy signals and sell signals. And he also says you can use them to help select option strike prices. In case you're not familiar with the Keltner channel, basically the Keltner channel is very, very simple. It's a 20-day exponential moving average, and that's what you get with your middle line. In this case, I've got a dotted middle line. And 2 times the average true range is the upper channel, and 2 times the average true range subtracted from the middle channel would be your bottom channel. So that's what a Keltner channel is. The way we use them to determine entry points with Prime Trade Select is we would look to buy a security anytime it was between the middle and the lower band, or even below the lower band. Obviously, we don't want to buy it when it's really high. We want it to pull back a little bit, and we would use that as our low-risk entry point. So the exploration that we have built for MetaStock is going to find stocks where the 50-day exponential moving average is 100 above the 100-day exponential moving average. It's also going to look for the stock to have traded at a 52-week high in the last 6 months. It's going to look for on-balance volume that is greater than it was 6 months ago. And then after all of that criteria actually matches up, he's going to look for the stock to decline back to the middle of the Keltner channel or below after making that 52-week high. And then, of course, we want to use stops, and that's where he would enter the position. He recommends 3 types of stop placements in his trade. Type 1, he'd sell the stock if it closes between 10 and 15% or more below the entry price. And he'd also use a 25 trailing stop. I've actually created the indicators for this. You'll notice in MetaStock we've got our buy indication here. This would have come up on a scan that day. And I've got a band between 10 and 15% and a 25% trailing stop. So we can easily watch that on the chart. Okay, the other type of stop that he'd recommend is what he calls a type 2 stop. And this, same thing, if the stock closes 10 to 15% more below where he entered it, then in addition to that, he'd sell a third of the stock position if the stock increases 30%, and another third if the stock increases 50%. And he'd actually hold on to a third of that stock position until the price of the stock closes below its 10-month simple moving average, but it has to do it on the last trading day of the month. So for that particular stop, what I do is I still have that 10 to 15% range. I've got a band that figures out where your approximate buy signal would have been, and I draw a line at about 30% of that and about 50% of that. Now you'll notice once it penetrates that band, we've actually got our expert advisor commentary actually telling you to get out of a third of your trade. And when it passes the 50% level, we'd actually tell you to get out of another third of your trade. The third type of a stock that he recommends is to sell the stock again if it closes 10 to 15% or more below the entry points. So you'll never ever be risking more than 10 to 15% of your initial position. And then what he would do is hold the stock position until the stock actually closes below the 20-month simple moving average on the last trading day of the month. So what I've got here is I've got the buy signal, and I've got the 10 to 15% range again, and this is an indicator. You just apply it to MetaStock. It's called the type 3 indicator, and it will actually calculate what that 20-month exponential moving average is. Okay. In addition, we've got an expert advisor in there. It's going to tell you, again, your buy conditions, your sell conditions on the chart. It'll tell you when to get out of a third of your trade and a third of your trade. It'll also monitor all the exit conditions for getting out of the trade. As you can see, I've got a chart up here with the expert advisor and my type 3 indicator attached. We also have, of course, commentary that's built into here to tell you what's happening on the chart, if it's a buy zone or a sell zone, what to do, the steps, and any exits that have actually triggered on the trade. In the Prime Trade Select add-on, we've included two versions of this Prime Trade Select system, a basic and a high probability system. We've also included matching expert advisors and matching explorations. And with all of the stop indicators and that kind of stuff, there's actually 9 indicators that are included with the system. We do offer the Chuck Hughes Prime Trade Select for $299. And as always, we actually give you a 30-day money-back guarantee on it. I'd encourage you to give it a try. The phone number is 800-882-3040. Thank you.